Today is Wednesday, August 27th, 2025. Welcome to your daily news update on Blip Brief. Small but almost everything updated daily. We're diving deep today into, well, a really dynamic 24 hours. It's a fascinating mix, isn't it? Economic shifts, some market resilience, and a bit of global intrigue thrown in. As you started your day, what was the headline that really grabbed you? Was it the U.S. tariffs hitting India, or maybe India's strategic moves?
Yeah, lots going on. Our mission on this deep dive really is to get beyond just the headlines. We want to cut through the noise, uncover the why behind these big developments, and connect India's unfolding economic story with those broader global currents that actually impact your daily life and, of course, your investments. So let's try and unpack this with some real clarity.
Absolutely. Okay, let's zoom right in on maybe the biggest news this morning. The U.S. has officially slapped that pretty substantial 50% tariff on Indian goods, effective today, August 27th. Now, this isn't just, a political statement. It's a potential game changer. It directly impacts a massive $48.2 billion of Indian merchandise exports. That's a number that's definitely going to ripple through things.
Oh, it's more than a ripple. I'd say it's a wave hitting India's most labor-intensive sectors almost immediately.
Yeah.
What's really critical to understand here is the swift, direct impact. We're already seeing reports, textile units in Surat, Tirupur, halting production.
Wow.
Yeah, and that's tragically leading to large-scale job losses. We're talking thousands of people. Think about the diamond traders in Surat. They're basically facing an existential crisis right now.
And then you've got the Indian marine industry, a major shrimp exporter to the US. They've already stated quite clearly they'll pass the full 50% duty increase directly onto American buyers. And this whole scenario, it brings us to a really crucial economic point, doesn't it? Trade tariffs, while they're aimed at one country, often lead to this pass-through effect. So ultimately, consumers on both sides end up sharing the cost, maybe through higher prices, maybe less availability, even if it's indirect.
That pass-through effect. Yeah, something we often overlook. And India's markets, well, they certainly felt that immediate chill yesterday. Both the Nifty 50 and BSE Sensex, India's main stock indices, they slid about 1%. Pretty broad sell-off. The rupee also closed lower. That's the fifth session in a row now. Economists are projecting India's GDP growth could take a hit, somewhere between 30 and 80 basis points this fiscal year. Now, for you listening, that's a pretty significant 0.3% to 0.8% potential reduction. Directly links global trade to local prosperity. And we're also seeing this credit squeeze for exporters as banks tighten up lending, which translates to, real-world problems for businesses trying to get financing.
Right. But if we connect this to the bigger picture, the Modi government isn't just sort of reacting passively here. They seem to be strategizing. They're reportedly planning 3 distinct ways to try and beat the tariff pain, even framing this as an opportunity in disguise, which is interesting phrasing.
Opportunity. How so?
Well, one path suggests Indian goods could potentially get an exemption if they meet certain conditions, though those conditions haven't been spelled out yet. More broadly, the center is apparently readying an export shield. This involves an export promotion mission and maybe some GST reforms aiming to boost domestic demand. So this feels like it's about more than just the tariffs themselves. It's maybe a strategic economic realignment and possibly a renewed push towards that Swadeshi mindset in production.
Ah, the Swadeshi push.
Self-reliance.
Exactly. Emphasizing domestic manufacturing, reducing import dependence, strengthening local industries. It's a long-term play against immediate pressure. Fascinating. And on the diplomatic front, things are still moving. India is actively talking with the U.S. about these tariffs. Our foreign secretary actually noted that 25% secondary sanctions were expected, suggesting this wasn't maybe entirely out of the blue. These talks are happening alongside the India-U.S. 2+2 intercessional dialogue. That's the high-level meeting with foreign and defense ministers. They're covering key stuff, trade, counterterrorism, defense. We even saw the U.S. ship USS Frank Cable docking in Chennai, a clear signal, perhaps, of ongoing engagement despite the trade friction.
And that engagement brings up another layer of, let's say, nuance. We're seeing these conflicting reports about Russian oil purchases. Mint suggests India might ease up on Russian oil buys because of these looming U.S. levies.
Right.
But then the Economic Times indicates Indian refiners are, well, unlikely to halt buys despite the penalty. So it really raises an important question about India's energy security priorities, doesn't it? How much flexibility does India really have in sourcing energy when it's balancing these intense geopolitical pressures against its own economic needs? It's a very delicate tightrope walk.
Indeed, it is. Okay, let's shift gears a bit and unpack the market performance. So, despite that broader market dip yesterday, the FMCG sector, fast-moving consumer goods, surprisingly bucked the trend. Nifty FMCG gained 0.9%, BSE FMCG up 0.6%. Companies like Hindustan Unilever, ITC, Nestle India, they were among the top gainers. Also, Eicher Motors and Maruti Suzuki in auto. On the flip side, Shriram Finance, Sun Pharma, Tata Steel, Bajaj Finance, they were among the top losers. Reflects the mixed impact, but this resilience in FMCG, is that you think a genuine sign of strength or more of a sort of flight to safety?
That's a really perceptive question.
Yeah.
It probably shows some resilience in consumer staples, yes, but
Yeah.
it's often characteristic of defensive sectors when the market gets volatile, right? People still need toothpaste and soap. What's truly fascinating, though, in the corporate landscape is Suzuki Motors' huge commitment. They've announced this massive investment, Rs 70,000 crore, in India for EV production at their Hansalpur facility.
70,000 crore, that's huge.
It is. And their ambition is big, too. Transform it into a global hub, exporting to 100 countries. They plan to launch 4 more EVs by 2030, produce something like 67,000 EVs in FY26 alone. This isn't just an investment. It's a really significant vote of confidence in India's manufacturing capability and its potential as a global EV player. Kind of echoes PM Modi recently flagging off Maruti Suzuki's Made in India Evitara SUV.
Yeah, that's a powerful statement about India's manufacturing future, isn't it? We've also seen Ola Electric get its PLI certification production-linked incentive for its Gen 3 scooters. Now, for you listening, PLI is that government scheme to boost domestic manufacturing with financial incentives. So this means Ola is now eligible for, 18% incentives until 2028? Pretty helpful for them. Elsewhere in tech, TCS is setting up a new AI and services transformation unit. Amit Kapoor's heading it. Really underscores how important AI is becoming, even in traditional IT services. And Apple, doubling down on India. 2 new stores opening, Bengaluru and Pune next week. Plus, a new partnership with Reliance Jio for RCS messaging on iPhones. RCS, for those wondering, is like an upgrade to standard SMS. Think read receipts, typing indicators, better media sharing, more like WhatsApp, but baked into the default messaging app. It's a big digital push here.
And if we connect that to the broader financial picture, what's quite intriguing is the behavior of foreign portfolio investors, FPIs. These are the big international institutional investors. So despite being net sellers in the secondary market recently,
Right, selling existing shares.
exactly, they're significantly increasing their bets on Indian IPOs, the initial public offerings. There's been a threefold surge, apparently, to about 26,508 crore just in FY25 so far, which suggests, a long-term belief in India's growth story, even if the main market feels a bit shaky short-term.
Interesting contrast.
It is. On the other hand, rising borrowing costs are definitely biting. Companies like Hoodco and Bajaj Finance actually had to withdraw bond sales because yields surged too high. And in corporate moves, the Gangwal family is set to sell off a 3.1% stake in Indigo's parent, Interglobe Aviation. That's worth about $801 million, or 7,020 crore. A pretty substantial move in the aviation sector.
Yeah, that split between the long-term IPO confidence and the short-term jitters, that's a key dynamic to watch. Looking globally, the S&P 500 saw some gains, boosted by tech giants like Nvidia and Eli Lilly. But this was tempered by those concerns about the Federal Reserve's independence after President Trump moved to fire Fed Governor Lisa Cook. That also helped weaken the dollar a bit. Asian markets were mixed, all eyes kind of on Nvidia's upcoming earnings report and some crucial inflation data. And then, there's the wild world of crypto. Bitcoin surged past $120,000. Wow. Amid news of some government order validating crypto as a retirement asset, that could be big for adoption. Eric Trump made a bold $1 million prediction for Bitcoin. And maybe most bizarrely, Kanye West's YZY meme coin apparently saw a $3 billion surge in just 10 minutes. Trump Media and Technology Group is also reportedly partnering with Crypto.com to buy their token, Kronos. It shows you the sheer unpredictability, doesn't it?
It really does.
Yeah.
It's a reminder of that speculative froth that can just bubble up, especially in newer markets, often fueled by celebrity or politics. But, the underlying news about crypto potentially being validated for retirement assets, that is a significant regulatory step. Could legitimize it further for mainstream investors. Creates this very interesting tension, right, between genuine adoption and just pure speculation.
A really crucial distinction to keep in mind, yeah. Now, while the financial world was grappling with all that volatility, we also need to acknowledge the human impact of events closer to home. Some heartbreaking news out of India. Jammu and Kashmir have been ravaged by floods, heaviest rainfall in decades, they're saying. This has led to tragically 11 deaths so far, over 3,500 evacuations. Train services hit badly. We even saw pictures of brand new Mahindra cars being washed away from a yard. Just shows the force of it. Himachal Pradesh also experiencing severe landslides, flash floods. A grim picture of the monsoon's impact this year. And just a note, today, August 27th, is a bank holiday in several states for Ganesh Chaturthi. So Indian stock and commodity markets are closed today.
And speaking of uncertainty, those ripples from Washington continue to affect global sentiment. President Trump's attempt to fire Fed Governor Lisa Cook is becoming a major focus. Her lawyer has confirmed she's filing a lawsuit to prevent her removal.
Right.
This whole situation really makes us consider the, well, crucial independence of the Federal Reserve from political interference. It's so vital for maintaining economic stability, market confidence, and it's certainly contributing to that weaker dollar we mentioned. Trump's also threatening new tariffs now on countries with digital taxes that affect U.S. tech firms, and we're hearing that 25 nations have reportedly suspended postal services to the U.S. because of his looming general tariffs. And for the average American, their view of the U.S. economy actually declined modestly in August. Seems like growing anxiety about the job market.
Yeah, those geopolitical and economic uncertainties, they're definitely driving sentiment. Gold prices, for instance, jumped, highest level in 2 weeks, driven by that political uncertainty and also the upcoming Trump-Zelensky talks tonight. On a much, much lighter note, albeit celebrity-centric, Taylor Swift and Travis Kelce are apparently engaged. So there's that. And back in Bollywood, the industry seems to be bracing for a bit of a subdued Diwali. Apparently a lack of big-ticket releases means they're relying more on mid-budget films. Just shows you the sheer range of news in a single 24-hour cycle. So, okay, we've navigated the immediate challenges, the shifting market landscapes, but what does this all really mean for the future? Let's try and close this deep dive with a glimpse into something truly groundbreaking. A scientific innovation that could quite literally change lives, offers a bit of long-term hope amidst all the short-term volatility.
Yeah, this one is genuinely remarkable, a breakthrough from the University of Minnesota. Researchers there have developed a 3D printed scaffold, like a tiny structure, that can actually direct stem cells to grow into functioning nerve cells.
Wow, directing stem cells.
Exactly. And the incredible part, they've successfully used this technique to restore movement in rats that had severed spinal cords.
Yeah.
The key insight here, I think, is how this multidisciplinary science, cutting-edge 3D printing, media advanced stem cell biology is moving beyond just theory. It's delivering tangible, functional recovery. In animal models, yes, but still. This isn't just about rats, obviously. It represents a potential paradigm shift, moving from just managing spinal cord injuries to actively repairing them, potentially restoring quality of life movement for millions of people worldwide someday. I mean, just imagine the implications for human health. It's profound.
From the fierce winds of tariffs and those complex market shifts, all the way to the quiet but profound hope of scientific breakthroughs like that, it really has been an extraordinarily dynamic 24 hours. The world keeps moving, doesn't it? Often in surprising directions, constantly challenging us to adapt and innovate.
And this really raises an important question for you, our listener, to think about. As India navigates these tariffs, maybe with this determined Swadeshi mindset, and as the world sees scientific advances that just redefine what's possible, what unexpected opportunity in disguise will truly emerge from today's biggest challenges? Whether they're economic, geopolitical, or scientific, how will our collective understanding, our application of this new knowledge, shape the next 24 hours, and indeed, the years to come?
Until next time, stay curious, stay informed, and keep digging deeper.